On a roller coaster ride recently, and maybe you're looking at your investments and thinking about the best way to respond. Well, here with more insight in today's Your Dime sponsor is Wall Street Financial Group's Chief Retirement Strategist and Founder, Zach Gray. Welcome back.
Excited to be here.
Okay, so last time you were here, we were kind of talking about the coronavirus and the effect it has on the market and all of that fun stuff. And we also were talking about it being a bear market.
That's correct.
So bear is in the animal.
Yes, bear's in the animal. So it would have been a bull first, okay, and then it's a bear second, okay? So in a bull market, we're seeing things rise. We're seeing things continue to run upwards, and we'd seen that for some period of time. You and I had talked in the past with saying, hey, the markets have been on a good run. Well, now it's definitely been some ups and downs, some roller coaster, and that's really followed by more of a downhill run than it has been uphill. So, you know, as you look at really the last decade or so, the markets have been doing really, really well. And there's a little slide that we put together that'll show the S&P 500. This shows you really over the last decade. It ends right at 2020 there, and it's a pretty good uphill run.
Well, it ends at January 1st, right?
That's correct. This slide does anyway. And I think if we were to follow that forward just a few months, you'd see a 20% decline starting in February throughout the month of March. And then that's what gets us to a bear market, right? So it gets us to a point where we're going, wow, we were on such a nice run here and everything was feeling good. Yeah. The economy was going well. This coronavirus, obviously, it took a big toll on some of our thoughts with the market. The market has turned, and it gets you really thinking about risk in your portfolio. I think sometimes times like this is making sure that you have a plan in place. It is one thing that we definitely pride ourselves on. You know, at Wall Street Financial Group, we put together our financial roadmap for our clients. We make sure we understand where they're wanting to go. Another thing that we need to understand is how much risk they're taking in their portfolio. So this is actually something that we pulled from Riskalyze. It's a software piece that was put together by a Nobel Prize laureate. And what they're trying to do here is show you risk of each and every single one of the holdings. I like it because it's nice to say, Heather, on a 1 to 100 scale, you score a 75. Now, the market itself scores about a 72. So in that little example, we're taking quite a bit of risk. What's interesting...
Is that smart?
Well, it depends on your age. It depends on what your game plan is. That's just a quick example. It has nothing to do with a particular, scenario. But I will say is the closer we get to retirement, maybe in retirement, that number should probably be a little bit lower than that. And I think it's a good place for people to start to understand how much risk am I really taking? It's times like these where people maybe don't want to open their statements, and it's a real gut check moment to say, do I really want to take that much risk? And does that make a ton of sense? And so we've got a lot of resources out there. Folks can go to wallstreetfinancialgroup.org, which is our website. I know they can jump through yours and get there. We've got a lot of tools out there that people can start to understand how much risk are they taking with their retirement dollars.
I believe a lot of investors are probably choosing to exercise caution and encouraging their clients to exercise caution. That's probably smart, right?
Well, I think when you get to retirement, I think you should be cautious going into it, because for most of our clients, they've done a nice job saving. And so for many folks, if we just simply say, well, we don't have to grow the dollars at an extreme rate, I think we can be in a position where we say, you know, I mean, what is a safe return? What's a cautious return? And if we can just get decent returns over time, there's usually not much of an issue. However, sometimes if we're swinging for the fences, but we strike out and the market goes down drastically, sometimes that can really shake up our retirement future. So just be cautious, make sure you understand risk. And if folks want to understand that a little bit better, I'd love to sit down with them.
Yeah, if they want to be a risk taker.
Or not. Right, exactly.
If you need any more information about what's happening with the stock market and that bear and bull and figuring everything out, Zach's your guy, and we'll connect you with Wall Street Financial over at CILiving.tv. Thanks for clearing up some stuff for us.
Love being here.